You have to let the numbers draw make the narrative. There's a narrative about Greta Thunberg and all these lovely characters.
Yeah.
And what they mean, and what the world should do about it, and what India will talk, and in all these world forums and all that about
Zero carbon.
yeah, all those
policy.
that's the narrative. But if you look at the actual ground reality, you can't do without fossil fuels. You need them. You can't. India needs more energy, and we need to burn more coal to get the energy. You look at around the world, we need more thermal power plants, we need more coal, we
You
need
don't
more
think
oil.
nuclear could be a good?
We need that, but would you want to have a nuclear power plant next to your house?
No.
The NIMBY,
Yeah.
not in my backyard.
Like,
You don't want it.
we figure out storage of it, and
Yeah, it's very hard. It's hard. It's a wonderful solution, but it's not easy to implement.
Right.
It's not easy to implement. And wind and solar are great solutions, but they have their own problem, and they are intermittent. They are not permanent solutions. So they're not going to solve the problem. And you need if you have economic growth coming in, and we are going to become the world's third largest economy, we can't have economic growth without more energy requirement. And if you study whatever is happening in the AI space, every time you go on ChatGPT, you are burning more trees. You're cutting down more trees. Sorry, not burning more trees. You're cutting down more trees because it is extremely energy intensive.
Yeah.
The amount of energy that is required to use AI
clusters absorb
amount
enormous amounts.
it's you just do some research on this space. How much energy AI requires. Then AI its exponential energy requirement is going to happen, and that energy is going to come from where?
Do you think fossil fuels will be able to meet that?
There's no choice. We don't have a choice. It's not like I love fossil fuels. I love the idea of pollution. I don't. I live in the most polluted city in the world. It is. One of the things we were talking about, stoic philosophy, confront reality. It is what it is.
Yeah.
You can't ignore the facts. You can either have economic growth, or you can have no economic growth, and then you can have all your green energy. You cannot have both. You need to have fossil fuels to drive economic growth.
And so, building on that theme, what are some other narratives that we all believe, but according to you, are misplaced or not?
There are all kinds of stories. People fall for these stories. So I had this wonderful concept called Bayes rule. It was Thomas Bayes, I think 1760s or something. He wrote this Bayes rule. Wonderful thing. Basically, this Bayes rule taught us about how do you form views about anything in the world, and then how do you change views when new information comes.
So, Professor, building on that theme of seeing market bubbles, I think we've seen a lot of those in the recent times. Which of those do you think are flawed, in your opinion?
Let me just step back from this. We talk about narrative bubbles. Let me talk about narratives as such. We have this concept called the narrative fallacy. It was coined by, I think, Nassim Taleb. People fall for these story stocks, and there's an element of truth over there. But let me go even further back to, I think, 1763, Thomas Bayes. He looked at it more formally. He came up with a theorem called Bayes rule. We studied that in school. It was such a boring thing to study in school, but it's got such practical utility. And he basically taught us how to form views about a subject matter, and how to revise that view based on new information that comes in. And let me give a couple of examples. So basically, there are two components that he used. One is how to form an initial view about something, which comes from what we call as base rates, which is basically some information which is similar to what you're examining. So let me take an example. Let's say you're trying to evaluate the possibility of funding a startup in the restaurant business. You are a venture capitalist. You would know. So you would think about what is the mortality rate of restaurants.
9 out of 10.
9 out of
fail.
10. So, 90%. So you say it's a very tough business to be in. Most restaurants don't last more than 3 years, that kind of a thing. That kind of understanding you already have. So it's a very, very tough business to be in. So that's the information that you already have. That's the base rate. Then you have to combine that with information specific to the situation that you're looking at. Now, it could be the chef, it could be the menu, it could be the location, it could be the track record of the person who has already set up many other restaurants and he comes to you that I want funding. So any information that is specific to that particular person, if you're focusing only on that one person and his track record, then you're only focusing on information specific to that person, that story. If you only look at the narrative of that person, then you're missing out on the base rate. So people make one or the two mistakes.
Yeah.
If they don't look at the base rates, they are being insensitive to base rates. And that's a very common mistake that people make. They go for stories. They think, oh, this is going to be the next Infosys. This is going to be the next HDFC Bank. You're not realizing the next HDFC Bank is usually HDFC Bank.
Yeah.
And they fall for these stories, and obviously there is something completely wrong over there. So that's the correct critique of stories. People fall for these fads and fashions, and they don't realize that they are moving into something which is very dangerous. For example, they may blindly go and invest in a company which is into perfumes without thinking about how difficult it is to make money in perfume. Most perfume brands don't make any money.
Yeah.
Or they go into the airline industry or the movie making industry or any other glamorous industry which with the success rates are very, very small. So that means you're insensitive to base rates. So that's one error that people make. The other error people make is oversensitive to base rates, which means that they pay too much attention to base rates and they ignore the information specific to that situation. And this is the example that I was giving earlier. Oh, it's a PSU. This is stereotyping. I'm not going to look at you. PSUs don't make sense. That's stereotyping. It's base rate. Oh, it's a PSU. I'm not going to. Oh, it's a Hyderabad company. So it's a fraud company. Or it's a commodity business. Not realizing that within a commodity industry, there could be a niche that is emerging. Or this is an M&A aggregator sort of a play, and M&As don't make sense. It's true that they don't make sense. Most aggregating companies, it's a tough game, but there are some people who have an amazing track record in that space. Constellation Software. There are so many. There are exceptions. So the idea is that if you can find an exception which is being treated like the norm, then you're onto something. So that's exactly the point. And so when we were looking at PSUs 5 years ago, there were hundreds of them. We only selected 5 because we thought they were unique. There was something different about them. They should not be. It's like throwing out the baby with the bathwater, or to use the other metaphor, to paint everything with the same brush. So when investors do that, and this is exactly what I love about markets, because they have this prejudice. Value investing in that sense is exploiting prejudices of Mr. Market. Mr. Market is very prejudiced in the short term. Over time, when the numbers speak, when the numbers perform, the markets will overcome those prejudices. So in that sense, the market is also a Bayesian. The market, when the re-rating happens, market will reluctantly re-rate the stock. That means the market is acting like a Bayesian. Market is correcting past mistakes. But that gap between the time that it takes to re-rate the stock is the opportunity that the value investor has, because he has seen in advance that there is an opportunity there. The market is mispricing it. There's misunderstanding. So that's the situation. So for me, there's always a narrative. There's always a story. But I think you should always pay attention to the numbers, to the evidence. Let the narrative come out of the evidence and not the other way around.
How do you train your mind to do that?
Well, I'm an accountant, so it takes a bit of training. Not get carried away. I have made the mistake of getting misled by the charisma of some founders. So I think you have to deal with it much more than I do, because I don't meet founders anymore as I used to. You necessarily have to do that. So you have to tell me about how you deal with the halo effect of the founders. And I'm sure you would have also gone wrong in some cases. So maybe you can give me a few examples about.
Well, in the private markets, unfortunately, not too many examples there because, you are betting on the jockey, right? You are betting on the founder's ability to be able to navigate all kinds of highs and lows. But then you just have to get to, how good the execution is and then focus on the execution barring like before our investment. Yes, we might talk about the founder story, etc., but then post investment it's all about execution.
But how do you explain the founder story of Elizabeth Holmes?
Yeah. Well, see,
What a story! And look who all backed
Yeah.
her.
But interestingly, they were not VC investors, right? They were not your usual VC investors. They were
So you're trying to protect the VC industry?
not at all. But it was a bunch of people who were investing outside of their circle of competence and weren't really privy to what was happening in the sector at large. So these were independent, ultra high net worth individuals that she could build a relationship with, and she onboarded as investors. But their usual job was to not have invested in businesses like this.
Wow. But I think there's a lot of lessons to be learned by studying people like her or Ketan Parekh or Harshit Mehta or Bernie Madoff. These are extraordinary individuals with, they can sell anything.
What
Yeah,
are your learnings being?
stay away from them. When you encounter them, they have this ability, and I've encountered a few of them in my life.